Do you know a company that is actively innovating in freight or disrupting the industry with its new approach? Nominate them to become a 2025 Freighttech company, and they could be honored as one of the Freighttech 100 or the Freighttech 25. Past honorees include Amazon, FedEx, JB Hunt, Project 44, Tesla, and many more. Companies can nominate themselves or other industry leaders that are making waves in the freight marketplace. Welcome back to another edition of Check Call. Don't forget to subscribe to Check Call, the newsletter on FreightWaves.com if you haven't already. Today we are bringing back the one and only David Spencer, Vice President of Market Intelligence at Arrive Logistics. Welcome back to the show, David.
Hey, Mary. Thanks for welcoming me back. Great to be here.
I think one of these times I'm just going to try to see how fast I can say your name and title, just how fast I can say it. I don't know that everyone that watches or listens to this will appreciate that, but it's fun.
Typical brokers listening at 1.5 or 2 times speed anyway, so we're good.
I will say that is the best feature to ever come out of things. However, I have done that to myself, and that's how I've learned that I need to slow down when I talk, because I talk very fast. And so apologies to anyone that's trying to understand this at 2 times speed, but also that is the elite way to consume audio content. So jumping more away from audio content into the freight market. So we hit the middle of the summer. Everyone was saying all eyes on 4th of July, all eyes on 4th of July. Well, 4th of July has come and gone. And we didn't do a little market update in July. Take the time off, celebrate America's birthday, if you will. But now we're in August, all the time that everyone was saying, okay, this is going to be the time to watch to see what's going to happen to the freight market. So is this the beginning of a turn? Is this something that we're excited about? Or is it just kind of, still wait and see what happens?
Yeah, I mean, I guess it depends on what data you're looking at, right? If you look at rates and you see, we've been slowly working our way from, really negative year-over-year growth and deflationary to, here we are, rates are positive on a year-over-year basis. And from a trucker's perspective or a carrier's perspective, great, but, one thing I know with that is okay, we're flat year over year with, not really a lot of upside potential in my mind here, especially in the short term. We've seen rates come down off the peak, throughout the month of July into early August, right? We've really, for the most part, seen rate declines, some regional hiccups. We had Hurricane Debbie, et cetera. But I think what we've really seen is a normal seasonal pattern. So rates went up in May, June, and early July, and they've come down in late July and early August. And so from that perspective, not really seeing a whole lot that says, hey, we're climbing out of this. But, I think everyone would welcome flat rates on a year-over-year basis as opposed to those continued declines we've seen really the last 2 years. I won't say everyone, right? Shippers are probably like, keep going down. But I think everyone does want carriers to get a good fair wage and to continue to remain in business. So stability in the market is a starting point, and we'll go from there.
I really kind of have some sympathy for those shippers that are really, driving those rates down. But also, if you don't pay your carriers, you're not going to have carriers to haul your stuff. So I kind of I feel for both sides there. But yeah, I mean, I think you have a point. We're in a nice, calm, very predictable rate cycle right now, which I, for one, am thrilled about. I mean, yes, I do wish the rates were a little higher, but for everyone, for margin and business and the market and everything. But I do like that it's just stable. I will take stable over like the insane ups and downs, because the insane ups and downs, they're exhausting. They are exhausting.
Yeah, it creates thrash, right? And thrash is thrash can create a lot of extra work, and whether that's repricing in either direction, right, and trying to stay in line and keep up with what's going on in the market. But yeah, stability, it does create predictability, but careful not to get lulled to sleep, right? I think the big question is next about what are we expecting Yes, so what? We've seen normal seasonality thus far. Will it continue? Will it not? Right? I think those are the types of conversations we're having, and we're just getting close to RFP season for all of next year. So, just when we have a good feel for what's going on, it's like time to start getting out our crystal balls to predict what we expect to happen for the next 18 months.
Well, I'll give you a couple more minutes to shine up your crystal ball because, we're going to look into it here in a little bit. But pretty much because the summer officially starts in like June 22nd or something. So we're kind of in the dead middle of summer. So what have you kind of seen and what's been like the most, not necessarily surprising, but what's the thing that has really kind of made you double back and go, oh, that's interesting from basically since the summer started?
Yeah, like I mentioned earlier, I think what we've really seen is what we'd expect to see. So that's certainly something that largely that's the pattern we're seeing. So not a lot noteworthy, although there's a couple of trends we've seen happenings as of late that aren't quite impacting rates yet, but we're talking about, right? Certainly, um, Hurricane Debbie was a shakeup that was a little bit exciting in the southeast for a few days. That storm didn't end up being quite what it had the potential to be. Yes, it was pretty, damaging to a few areas, but overall, not the giant rainmaker that they predicted it to be. And I think we're already seeing most of the impact from that kind of wash away, so to speak. But out west, I think really is the most interesting pattern we're seeing. Southern California, the import levels, containerized imports coming into the country, especially to Southern California. What that's done from a rail perspective is it's now, we're looking at outbound rail volumes from that area really at all time highs. So, according to your guys's rail data, and sonar. But that's certainly an indicator, a leading indicator of what could come on over the road transportation out of that region. So we're closely watching what's going on with imports, especially into Southern California. And when you throw in a couple of what if scenarios, this Canadian rail strike has a potential, as well as the East and Gulf Coast port workers potentially striking. Let's say both of those events were to happen concurrently with peaking imports here in August and September. Could you see some pretty strong spot demand out of Southern California? I think you could, right? So if there's one place to have your attention focused, I would say it's that area and what happens with those both labor negotiations.
I think that everyone has kind of more or less collectively decided that Southern California is the one to watch, and that's going to kind of be the leading indicator, which makes sense because that's the one that sees all the import volumes and has always traditionally been the kind of the one to start it all off. They've always been the ones saying, okay, well, we got a bunch of import volume here, so everybody's buying and everybody's doing stuff. So I think that will continue to be a trend, but we've like you're saying, we've seen that increase in import volumes, but it hasn't necessarily resulted in high rates and high volumes going to other parts of the country. It's just been a little elevated. So whether or not we continue to see that into peak season is a great question. Will it continue to increase? Statistically, I'm on board with saying yes, because we have some peak season coming up. But I also know that retailers aren't necessarily chomping at the bit to place more orders and import more things because they aren't. Everyone's kind of not sure what the consumer is going to do this year because things are a little hairy there. So I don't know. Do you see import volumes kind of slowly trending upwards as we round out the year or head into the fall, I guess?
Well, one of the data points I look at is the National Retail Federation's forecast for retail imports, and really their expectation for containerized retail imports is to peak here in the third quarter, and so and ease as we get into the fourth quarter. I mean, remaining at elevated levels, right? I think in July we actually saw July import levels eclipse peak COVID import levels for July. So July, August, September, yes, I think we're going to see a lot of freight coming in, and then we'll see it taper off. I think that's a similar trend we've seen in more recent years. uh, as shippers really, especially retailers, look to extend that holiday shopping season, get freight in a position earlier, lessen that sense of urgency of once that freight is getting making landfall here in the U.S. To get to its final destination. It relieves some of that pressure and urgency and eliminates some of that last minute overpaying spot freight kind of stuff, right? So, really the last couple of years, peak season has been really concentrated around the week leading up to and the week following these major holidays. Last year we had winter weather complicate things throughout early January as well, so that'd be something to watch. But I think outside of those few weeks, we're not as concerned around the fourth quarter. I would note, this year we're expecting to see less time between Thanksgiving and Christmas, where things fall on the schedule, right? With Thanksgiving being at the end of the month. All noteworthy, nothing that I think is going to be the major shakeup that's going to cause a sustained disruption.
I do like that retailers have kind of gotten on board with this shipping things earlier versus I do hate that it kind of has almost took them this long to get on board with it of, anything that you can do to pull that product forward. Obviously, storage and everything is a huge factor for that and not super easy for people to accommodate, but it also kind of begs the question of is that do you have that storage space and how is that rent if you need more, like how is that renting more storage space compared to those last minute high transportation costs and worrying about product being on the shelf for someone to buy. So I do like that we've kind of come to the era of balance there, and I think that that's going to be a great move for those retail shippers moving forward, not just this season but for future seasons to come.
Yeah, and it's created a more predictable pattern around peak season shipping as well, and so it's brought that peak demand earlier and kind of lessen that chance of having increased costs, unexpected increased costs in that window.
So I am going to ask you to bust out that crystal ball. One of these days we'll have to actually get like a crystal ball, but production budget's not that big. Or like one of those, what's the lady that like you could put your coin in and like she would tell your fortune? Um, no, like the machine. There was like a name for it. I don't know. I'm sure someone will tell me once they watch this. But we should get one of those to like put out what the spot market's gonna do. But short of that, we have you. So what are your predictions for the rest of the summer, which I guess is just now through like the middle of September? What are your predictions for spot market rates in the summer? Do you think they're going to do anything crazy? Are they going to get exciting? What about even for the rest of the year?
Yeah, I think the immediate few weeks here, right? The end of August and leading up to Labor Day is certainly a period where we've historically seen some rate volatility. I was just looking at an analysis this morning around what we experienced as a business with our cost per mile trends last year by region and by mode, and saw some really interesting things. Most regions saw that week before, plus or minus 1 week of Labor Day, saw a peak for cost per mile, from I'd say August through until we kind of got between the summer peak season and end of year Q4 retail peak season. Most regions, from an outbound perspective, saw a peak cost per mile, plus or minus 1 week around Labor Day. And from a refrigerated perspective, really leading up to Labor Day is a big period right there, because getting all that food, it's a big grilling holiday, right? Getting all that food in a position. Certainly, we're going to expect to see refrigerated equipment see increased rate volatility in the lead up to Labor Day. Saw that last year, expecting to see that again this year. Right now we're already seeing that out of the Northeast. I expect that to kind of continue to expand, across the country in the run up to the holiday. And on the van side of things too, we're definitely going to see some increased volatility around the holiday. Actually, on the backside of the holiday, in terms of replenishment of goods that were purchased, we saw a little bit more, rate pressure from a van side of things. So I think definitely watch out for Labor Day holiday. We're going to see an elevation of tender rejections, and increased spot rates around that holiday. We typically see a little bit of elevation of rates around the end of the third quarter as well, at the end of the month of September. But like I said earlier, it's really those weeks around Thanksgiving and then Christmas and New Year's where we're going to expect to see that volatility, um, and go from there. Yes, severe storms are still expected to occur here in the next few months. We'll see what happens with that. And then as we get into really that winter season, if we see anything like we saw last January, certainly expect that to be disruptive as well.
So that actually leads me into one of the questions I had for you, which is, do you think that, so, technically hurricane season starts in June, and it goes through the end of October, but realistically, it doesn't really we saw Hurricane Debbie, obviously, very grateful that her impact was not as worse as it could have been. I know that originally they were predicting like 30 inches of rain in certain areas, and like, that's not necessarily like devastating like a hurricane. That's just like a whole other problem that, I don't even know what you do with 30 inches of rain, but it has to go somewhere and it'll find a way to go. But realistically, so the majority of hurricanes obviously happen in October and some pick up in September as well. Do you see that kind of having an overall impact to like a nationwide supply chain, or do you see it just kind of regionally affecting the southeast, with like the west and the midwest and the northeast mostly kind of going on business as normal?
Yeah, it's really tough to predict what we're going to see with the storm, and because we don't know what these storms are going to look like. But I kind of come back to understanding we're trying to get a feel for, is this going to have a nationwide impact? I come back to getting a feel for where we're at from a vulnerability standpoint from the whole market, and you look at tender rejection rates are relatively low. You look at that delta between spot and contract rates is still pretty high. And so what kind of event is going to cause a 30 plus cent spike in spot rates, or even 20-25 cent jump in spot rates that is going to shake up the market? I mean, it's rare to see that, right? So there've been a few hurricanes in the time I've been doing this, and even going back to say the early 2000s, I can think of just a few that have really caused a sustained disruption. So I guess from that, I would say that any major hurricanes or hurricanes that would hit, the United States and make landfall, I'd expect to most likely be more localized impacts to transportation markets. You definitely saw some inbound, outbound imbalances as a result of Debbie. I think that's something you could see again if a storm were to hit, but still expecting a pretty active season here. And as those forecasts become more clear, we'll have more details on how it might affect the larger market. But overall, I think vulnerability to a sustained disruption from one of these storms is pretty low.
I don't want to say it helps, but it definitely makes it less severe of a nationwide network disruption, because we still do have some of that excess capacity in the market. So I think that having that excess capacity around going into hurricane season, or natural disaster times, or other weird events that could happen that affect it, I think that makes it easier to kind of absorb some of the disruption there, with that excess capacity. Whereas I think back in, what was it, 2020, 2021, when there was no excess capacity and any disruption anywhere was felt across all the states. So I think that's kind of a nice buffer to have, is that there still is that excess capacity, which is unfortunate for those carriers that are still not seeing those rates that they want.
Yeah, I think one of the things that's different too is there's a lot of capacity that just off the field of play. They're just on the sidelines. So if there were to be that opportunity, you'd see a quick movement of drivers re-entering the market that have recently exited. And so that's certainly something that could limit the upside potential of any of these disruptions as well. Even though we have seen trucking employment kind of moving in that downward direction, right? 4 straight months of labor statistic data pointing to attrition in trucking employment. 30,000 jobs year over year in July decline. Yes, capacity is leaving the market slower than we've seen in other cycles, but yeah, it will be, in my opinion, I think still somewhat readily available to come back into the market should there be that demand surge that calls for it.
I very much agree. And moving into one of my favorite areas is the time that I get to. I'm not quite asking you our favorite question of the day yet, but I would like to know if you have any hot spicy calls for the rest of Q3. You know, Q2 earnings came out a week or two ago for most companies. So, David, I want your Kentucky Fried Chicken, or I'm stealing it from Thomas. Your Kentucky Fried Chicken, hot and spicy take for the rest of Q3.
Such a tough one. I really think Labor Day is going to be catch people a little bit off guard in certain areas. So, got to be aware of what we normally see around that holiday. First and foremost, the most pressing thing right now is this potential Canadian rail strike imminent in terms of next week, right? So, yes, there's a vast oversupply of capacity up there, but if that thing goes on and on, you could really see some crazy stuff kind of pick up here, and that spot market in terms of intra Canada and cross border Canada, it would pull a lot of capacity out of that cross border marketplace as well. So that's something we're watching very, very closely over the next week here, is if that strike is actually going to occur and how long it might last.
Kind of hope it doesn't because I don't love the disruption. Um, but at the same time, I want those workers to get what they want. They feel passionately, and I'm very happy for them. But that does lead us into our new unhinged question to ask David. And I do have to thank you for being game for all of the questions that you have answered over the years, because you've definitely covered the most of everybody. And, you're just an amazing sport for hanging out with us. So this one is, if animals could talk, which one do you think would be the most dramatic?
Like when I first thought this question, I just thought about which animal would be the most dramatic. So can I just go with that direction? Because the whole talking thing kind of threw me off. But have you ever seen fainting goats? Like instantly they lock up when they get frightened, and it's funny when you realize that they don't actually get hurt from it. But yeah, they in my mind, that's got to be the most dramatic animal I've ever seen.
All right. Well, if someone has a suggestion for the most annoying or the most dramatic animal, or if they just, want to borrow your crystal ball, where can they find you outside the show?
Yeah, really, first and foremost, arrivelogistics.com. Navigate to our insights page. You can find all of our content there. You can reach out to myself and the market intelligence team at Arrive there. Happy to provide any answers to questions you may have, or intake any feedback on our crazy, silly question answers. Pretty accessible on LinkedIn as well. You can find me here on Check Call Podcast pretty frequently in addition. So those would be the best areas to find myself in our content. So thank you, Mary.
Find Check Out the Podcast anywhere you get your podcasts, like Apple Podcasts and Spotify. Don't forget to check out all the other incredible FreightWaves shows, and don't forget to subscribe to the newsletter on freightwaves.com/checkcall. See you on the internet.